Senior investment strategist at Lanschot Kempen. Joost, good morning. Thank you for being with us. It's very unusual to hear from the Bank of England and the IMF on the same day, ultimately, raising concerns around AI valuations and the potential here for a market correction. What do you make of their comments, and do you agree that there is a risk here?
Yeah, well, we've seen comments like these emerging sort of over the past weeks or months, I think. We see the huge investments in AI, which cast doubts on essentially the profitability of this. I think it's a coincidence that the IMF and the Bank of England warn at the same day. The IMF, frequently or more often warns about risks in the global economy, be it from AI or sometimes parts of the financial sector. It's a coincidence that they're together at the same day, but it fits a pattern that we see over the past few weeks, I guess.
Timing might be a coincidence, but what do you make of their comment in terms of ultimate risk here for investors? Is there actually potentially a bubble forming here? As you highlighted, we have also heard the Fed chair suggesting that valuations are also too high at this stage. Are we approaching the point of a market correction?
That's a good question. It's hard to say. I think when you look at the valuations of the big US tech companies, they're not excessive on for example, on a forward PE basis. Somewhere in the 30s, most of them, and that is high. But there are also companies who have shown to be able to grow their profits in the past steadily and strongly, so that justifies high valuations. It depends, of course, on the projections of those earnings. When you look at trailing earnings, valuation on trailing earnings, they're higher, but it depends all on your expectations for earnings growth, which are high. So there's a risk there, and I guess when you look at on a valuation basis, you can argue that's a bubble. I'm not sure that that's the most strong indication. When you look at, for example, investment in AI and the growth in investments, and the fact that some of these companies are financing each other, buying each other stocks or financing each other, I think those are also signals of a bubble. So if you think of a bubble of about 5 stages, we're probably in stage 3. And as long as there's more demand for AI, which we see from companies, from individuals, I think it can continue. But how far is obviously the big question.
Right. I just would like you to look at the scenario for one more time before we move on to other topics. When you think about a potential market reaction off the back of concerns around AI valuations, could this mean, a broader correction for the global market? Would there be spillovers, for instance, for Europe? Or could this be more contained, given the size of the AI investments are actually mostly taking place in the US?
Yeah, so the US is the biggest risk. And if there appear to have been a bubble and the projections are not feasible, then you will have a big correction. But I think when you look back to the .com bubble in 2000, you also saw European stocks falling a lot. So I wouldn't say that European stocks are fully shielded. But yeah, obviously the US is more at risk. The valuations are higher, so it is a bigger risk. But I would see, and it's very unlikely that Europe would be fully shielded. When you look at sort of the broader impact on the overall economy, I think this boom has not been financed too much with debt, and certainly not with bank debt. So in that sense, the effects for the broader economy would be limited. In that sense, I think it's also comparable to the .com bubble. We saw a huge reaction on equity markets at that point, but a limited reaction in the real economy. So it's more like, I would say, 2000 than, for example, the financial crisis in 2008, 2009.